Well, Sasol reported a 2% rise in first-half headline earnings per share to 24 Rand. The company saw operating profit increase by 9% to 18.9 billion Rand, and that on the back of increased sales volumes and a weaker Rand. We caught up with David Constable, who's CEO of Sasol, for more on the results.
If you look at revenue and turnover, it was up 3% to 85.3 billion Rand. And if you take out the significant once-off charges, which I can get to in a moment, operating profit was up 9%. And so the underlying profit in the company is actually growing quite nicely. Again, we had once-off charges due to impairment at our ARIA facility in Iran. And of course, impairments are your on the book carrying value, and then you do a fair value calculation. And that's almost 2 billion Rand that we had to impair that facility by, plus translation losses or currency losses when you compare our Rand to the Iranian Rial, which has devalued dramatically. That's another billion, over a billion Rand there, that definitely affects earnings per share because it's a once-off, but it does not affect headline earnings per share. So I like to look at the underlying profit, and I'm quite happy with the performance of the company in the last half.
Yeah. Now, instead of those, in terms of those write-offs, would you say this is the worst of it? The dirt is out of the earnings and numbers.
Yeah, as you may have heard at the the results announcement this morning, we have now, as of 28 February, we have the ARIA petrochemical facility held for sale. Right. So that means we're moving down that path quite nicely. As you know, we're moving out of Iran for sanction reasons, and the fact that we've got a strategy in North America, and just makes, from a strategic perspective, makes sense to move on from Iran. So that divestiture is moving forward, and once we finalize the sale, there most likely will be another translation currency loss. We're guessing of possibly $100 million US. That's the ballpark right now.
Was Iran a strategic mistake?
You know, I don't think so. I think that facility has been a great profit performer for us based on low-cost feedstock in the country. So it's been a very, the dividends that we've paid to Sasol, to our shareholders from ARIA, has been a great success. But again, in the bigger picture, strategically, we need to move on.
So I was looking at the market reaction to the results today, and really Sasol's share price hasn't gone anywhere, suggesting that the market had largely priced into the results that you've just announced. What positives do you think the market has taken out of this set of numbers that perhaps they're holding in here for the future?
Yeah, I think based on our trading statement that we issue back in December, December 3rd to be exact, I think with that trading statement, the market was directioned, and they had a pretty good feel for what we'd be coming out with today. So not a lot of movement, like you say, but I think the positives are that we've got great foundation businesses generating lots of cash. Our business model generates cash in South Africa, in Mozambique, in the Middle East, in Qatar. Our GTL facility is the flagship GTL showcase plant in the world today. And then over in the US, our existing ethane cracker is doing phenomenally well because they're using low ethane feedstock and making a lot of money. So our foundation businesses are strong. The shareholders need to know that. It's therefore delivering a progressive dividend policy, but it's also funding our growth aspirations. And we've got a great project pipeline of growth projects, focused. We're going to focus on these projects to be successful. And you couple those two things together, and we're excited. And I think as we move into first of all, the ethane cracker, where we'll take FID here in calendar year 14, probably middle of calendar year 14, that's a fast-track project where you'll start to see the growth coming in the near term, in the near to medium term.
Let's talk about the detail of those drivers in terms of earnings going forward and growth for the group. Give me some numbers in terms of what you're looking at overall, because I think sometimes in talking about Sasol, we tend to forget just how big these projects are. Some numbers in terms of CapEx, some numbers in terms of production that will be coming up and added in.
Well, from a production standpoint, let's say at the end of the decade, we'll fast forward to the end of the decade, and we've got We'll have a 1.55 million ton per year ethane cracker online with derivative products, high value derivative products which demand a premium in the marketplace. About 10 different products in behind that cracker. You take ethane, you crack it into ethylene, and then you make a variety of high value products that go into the marketplace.
Sure.
So that's 1.55 million tons. Then you've got another 96,000 barrels a day of GTL, which is diesel fuel and naphtha and LPG and base oils and a host of products, again, very high value. And that amount of production right there will almost double Sasol's current production. So you can think of us, getting almost doubling the size of the company by the end of the decade, to give you an idea. The CapEx involved, as you asked, we're still just moving into front-end engineering and design. So giving numbers right now, they are rough order magnitude. And we are quite conservative with our estimates right now. I believe that as we go through front-end engineering and design, optimize the schedule, optimize the business case. Some of these plants, some of these units can be over the fence. Let someone else take the CapEx and take the risk. So, but generally speaking, the cracker and the derivative products will be in the $5 to $7 billion US range.
Right.
And then the GTL plants will be in the $11 to $14 billion US range. But like I said, I believe we'll be optimizing both those programs to the lower end of the range as much as possible. Right. And I'm confident that we can do that.